Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you today. Happy Friday to everyone in the house. Well, before we kickstart the session, let's run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by giving me a hi. And if it's not working fine too as well, let me know too, so that I can do the necessary adjustments so we can have a better experience out here. So I look forward to your feedbacks while I load up my comment box. Thank you very much, guys. All right. So I can see a handful of comments right here. Thank you very much, guys. From Walid49, I'll Remax, good morning. Thank you very much. Tony Pablo, good morning to you. Qualib, good morning. And we also see Votuan with us poem. Thank you very much, Votuan. Tet82 says, hello, any idea for US Oil? Of course, we are going to be attending to the US Oil in a moment, so stay tuned in so you don't miss out on that session. Then I see Amisco. Thank you very much, Amisco. Glad to have you around with us this morning. So I think we are very good to go this morning, and it's on this note I welcome you all to yet another promising edition of the Extreme Speed Live, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour I'm going to be your host, as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective, using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And in fact, I have very interesting trading setups that we will be using to guide our trading decision for today. So I encourage you all to stay tuned in so you don't miss out on any of the ideas we will be talking about today. And of course, today being the last trading day of the week, it also comes with its own psychological peculiarity, which we will be taking into consideration while we review the current market structure. Well, today being the last trading day, majority of market participants will be rounding off their trading activities ahead of the weekend, and due to the uncertainty surrounding the market regarding the timeline of the interest rate cut for the year 2024, the geopolitical tensions in the Middle East, and majority will want to close their positions because they never can tell what will happen, and we may likely be seeing price move in the opposite direction of the prior leading price action. So we are going to be taking all of these into consideration while we review the current market structure. So with that being said here, let's dive right into the business. And the first thing we usually do on a daily basis is to keep tabs with the fundamental factors that are likely going to be influencing the market sentiments today. And for those of you who have been with me for a while, we know how important these events are, as they usually manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. Now, so far this week, we really do not have too much high impactful event from both economies, so we had to include some mid-tier economic features so we can have a broader view into what may be influencing the market participants for each day. Now, we had some handful of speeches from Fed officials since Monday. And then on Tuesday, we had the most anticipated event, which is the Consumer Price Index, which of course came in at a phenomenal high, beating all market expectations, hereby emphasizing the sticky nature of inflation in the United States. And also this development incited the idea that interest rate will be left higher for an extended period of time. Then on Wednesday, we had the GDP data from the Japanese economy, which of course wasn't that good at all, as we saw the economy contracted by 0.4%. This is the second consecutive time the GDP from the Japanese economy will be be contracting, and this technically is calling recession. So we look forward to see how the market has been reacting to this latest development. And of course, this morning, okay, we'll talk about that when we get to the USDJPY. So yesterday we were seeing the retail sales data from the United States, which of course had brought a mixed reaction into the market dynamic, where the figure came in below expectations at a minus 0.8%, giving us a sign that bringing in up another idea that interest rate may be cut as soon as the month of March. So we have a mixed reaction in the market right now. So we are going to be looking into that details very soon. Now, for today, February 16th, what are we going to be looking at? Well, we have two high impactful events. Let me take that one first of all. The first one here is the producer price index. And for those of you who do not know, this data measures the average change over time in the selling prices received by domestic producers, excluding volatile food and energy sectors. Now, a higher than expected reading suggests potential inflationary pressure impacting market sentiment by signaling changes in production cost and potential effects on consumer prices. So this index here is also going to be an inflationary gauge, so the Fed Reserve too will be looking forward to it, as this will also help in determining how the timeline for interest rate cut for the year 2024. So the from the data we have here, we had 1.8% from the month of December. And based on what is on ground, economists are projecting 1.6%. So we look forward to see what the actual data is going to be on that one. Then later on today, we will be looking forward to the publication from the University of Michigan, and that is the Consumer Sentiment Index. Now, this index gauges the prevailing sentiment and confidence levels amongst consumers, providing valuable insight into potential shifts in economic conditions. Now, changes in consumer sentiment can influence spending patterns, impacting various sectors and market conditions as well. Now, from the data we have here, the previous month came in at 79 and consensus projecting 80 for the month of February. So we look forward to see what the actual data is going to be on that one. Then besides these key events for today, we will be looking forward to speeches from Barr, who is the vice chair for supervision of the Board of Governors of the Federal Reserve System. He is also a member of the Board of Governors for an unexpired term ending January 31, 2032. So he's going to be having a speech later today. And then later on today, we have Mary Daly. Mary Daly is the San Francisco Reserve bank head, and she's also an effective voting member of the Fed's committee too as well. So their speeches here will be carrying a lot of weight, and market participants will be looking forward to scrutinize their remarks and statements for clues into the monetary policy of the Federal Reserve, and of course the economic outlook and potential future policy actions. So these are the events we will be looking forward to today. And of course, as technical traders, we do know that the anticipation of this event usually has a way of influencing the market sentiment in such a way that it could transition into patterns and structures that we will be needing to position ourselves for the next move. So stay tuned in as we dive right into the first asset on our watch list for today. So the first asset we are going to be looking at today is going to be the USOILSPOT. And in fact, what a phenomenal week we had here on the USOILSPOT. We had roller coasters of sells and buys, and in all of these instances, price action really moved well in our favor. And for the sake of those who are joining us for the first time, let's quickly run through how the week began for us all and what led to the decisions we made. Now, at the beginning of the week, we saw how price action was initially confined within the range of the $76.58 level and the $76.26 area to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we identify this kind of range, we usually exercise patience, waiting for price action to either break out of the resistance line for buying opportunities or break down the support line for selling opportunities. And at the beginning of the week, it was more of price trading close to the support line of that range, and as a result we decided to sell the retest of the structure, and in fact we saw price move about 75-80 pips in our favor. And of course, since price moved very well, we moved our stop losses accordingly, and we got taken out with some small profit on that one. Then moving forward, we saw this engulfing bullish candle which went to break out of the support zone of our range to give us our first buy position for the week. And since that moment, we have been buying the USOILSPOT. So we bought the USOILSPOT for about 2 days, added more positions at levels we identified during our live session: 76.80, 77.20, and of course the $78 area right here on Wednesday's trading session before the bearish momentum began. Now, during our live session on Wednesday, we decided that we will be using this ascending trend line to guide our trading decision, and we shall maintain a bullish outlook as long as price remains above that ascending trend line. However, we did emphasize that if this ascending trend line gets breached and broken to the downside, we shall be positioning ourselves below the $77.20 area to capitalize on a bearish move. And of course, this bearish momentum was a reaction to the surge in crude oil stockpile in the United States, towering at about 9.2 million barrels for last week production, and this led to price drop significantly to the downside. So we sold here, and we also added some more here. Scooping, we saw about 150 pips for the first sell position move, and about 80 pips thereabout for the second sell position, and the third position did not do well at all as we saw price take us out of that position. So we were able to scoop in about 150 pips on that sell position. Now, during our live session yesterday, that is Thursday's extreme speed live session, we begin to notice how market price action was confined within that range between the $76.26 level, remember, and we said that this kind of character shows how crucial this zone is. Now, when we went to as far back as last week, Thursday, we saw how the $75.90 area had played a major role in negating all attempt by the sellers to break through that particular area. Look at what happened here last week, Thursday. Look at what happened here last week, Friday. And at the beginning of this week, we saw what happened here again. And during the course of yesterday's trading session, we saw what happened around this particular area. And with this observation, we decided to consider buying opportunities as well. And we said here that this whole consolidation phase could transition into a reversal pattern where we will be having our neckline for this pattern around the $76.26 area, and we did agree that if price ever breaks out of that neckline, we will be having buy positions. And we saw the position got triggered. Our buy stop order placed again at $76.50 level. That one also got triggered. And of course, the $77.20 area. And on these three positions, we were able to see a minimum of 250 pips move. I do hope you moved your stop losses accordingly when price moved very well. If you had done that, you must have been taken out of all the buy position with some significant amount of profit. And for those who did, well done, and kudos to you for being on standby to capitalize on that move. Now, as it is right now, I have a sell position triggered right now, and I will be explaining to you in detail why I sold this asset today. And before we go into the details, we would like to refresh our memories as to what we saw on the on the higher time frame. That is looking at things from an holistic standpoint. Now, before we go into the higher time frame, let's understand what factors have been driving the market sentiment in this environment. Now, since all buy position has been closed right now, following the disappointing US retail sales data that came in yesterday, this development has raised expectations that the Federal Reserve may reduce interest rates in the nearest future. Now, the latest US retail sales we saw for January earlier was about 0.4%, I think. I can't remember anymore. And which was, of course, below all market expectations. And the drop in interest rate has contributed to the increase in oil prices, leading to higher demand for oil due to increased activities at lower cost. Simultaneously, the escalating geopolitical tensions in the Middle East could drive oil prices higher by disrupting crude supplies in that region. However, yesterday, this is quite interesting, yesterday the International Energy Agency predicts an oversupply of crude oil in 2024. So they were forecasting a global oil consumption increase of around 1.2 million barrels per day, and in 2024, which is nearly half the growth rate observed last year. Now, this projection may limit the upward potential of oil prices. Now, remember what I was telling you here 2 days ago as regards to the projection of the OPEC Plus, where they were forecasting an increase in oil demand for the year 2024 and 2025. Now, 2 days after, the IEA is projecting a high increase in oil consumption in the year 2024. So you can see the political play going on here. And I told you 2 days ago that I'm not buying into the report of the OPEC Plus due to the fact that you will know how OPEC Plus is trying to artificially increase the price of oil, increase the demand for oil, and whatever narrative there will be pushing out to the public will more or less be in alignment with that perspective. Now, the IEA from the United States are now saying that there's going to be high supply of oil in year 2024. So we have two contrasting data here, which has brought in some mixed reaction into the current market dynamics. Now, how do we intend to navigate this market following all these various factors? Well, we will try to understand what market participants are thinking. which of course will reveal itself via the current price action on the chart. However, it is important to note that today market participant will be looking forward to the US producer price index, which of course is another inflationary gauge to give us an insight into the easing cycle of the Federal Reserve. And of course, we also have some other speeches from the Fed officials to further give us fresh impetus into this market, at least short-term trading opportunities. Now, given this development, how do we intend to capitalize on the next move? Now, looking at the structure, first of all, let's scale up into the 4 hours time frame. Let's see what is going on around here. Now, remember that on the 4 hours time frame, what we did on this asset was to take into consideration the nature of price action since the beginning of this month of February. And of course, we had a couple of ascending trend lines to buttress the fact that price action has been bullish since the beginning of this month. However, something interesting happened this week where we saw price break down both of this ascending trend line. We saw the first breakdown here, then we saw the second one happen here on Wednesday before this impulsive move came back into the structure. Now, from a technical standpoint, when price breaks down a key structure like this, we expect at some point in time price may come back, retest the structure to incite another wave of bearish momentum. Now look at what happened. Let me zoom in. As soon as price action got into the $78 area, which interestingly shares a confluence with that ascending trend line, we saw bearish pressure resume from that area. So with this development, I decided to sell below the $77.20 area with the hopes that this may be the beginning of the second leg of the bearish momentum that started on Wednesday's trading session. So that is why I sold around that area. Then another thing that supports this bearish idea is the fact that a $78 area had played a major role in negating all attempt by the buyers to break out of the structure in the last 3 weeks. Now look at what happened here in January. We look at what happened here January 30th, and look at what happened throughout the course of the week. Selling pressure every time price comes into that area. Now this further buttress the strength of the sellers around that area, so it makes a lot of sense that we look out for selling opportunities. So at this point in time, I already sold here, and I will continue to maintain a bearish bias as long as price remains below the $77.20 level. So I wanted you to see how the market is playing out on the higher time frame, so we can all be on the same page when we get back to the 1 hour time frame. So right now we are back into the 1 hour time frame, and that is the $77.20 level. As you will see right here, price has already triggered. We've already seen a trigger of the position, and so TP target area, we're looking way below 75 area. In the meantime, let's see how far this will go. And in fact, we have multiple levels that will be guiding more trading opportunities in this market. So we have the key level at the $76.50 area. If price goes ahead to break down and retest the structure, we will be adding more sell positions. And if price goes ahead to break down the $75.90 area, we'll definitely be adding more sell positions to our existing trade. Now, for those of us who missed out on the sell position, it's okay. Let's see if the market can come back to retest the structure in an attempt to incite a downtrend move. If it comes back, let's look out for opportunities to sell around that area. Now, in as much as we're looking out for selling opportunities in this particular market, what are the chances that buyers can come in at this point in time? Well, for those of us who are sold now, and if price gets into the $76 area, please, we should move all stop losses, secure this position, as we never can tell. Maybe this bearish momentum we're seeing may be a retracement of that impulsive move, where the appearance of reversal pattern here could incite an uptrend move. So as soon as price gets into the zone, let's say between the $76.58 and the $76.26 area. Move your stop loss, secure the position, and let's wait to see how the market will react to this area. If we see double bottom structures here, we buy the breakout of the neckline, or any form of reversal pattern, we buy the breakout of the neckline and join the uptrend move. But if price breaks down and retests the structure, we will continue to sell this particular asset. Now, if price does not go that far and instead continues to climb new highs, then we're having a buy stop order above the $78 area to continue the uptrend move. So this is how we are going to be managing our positions on the US All Spot today. I hope I made myself clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can use that time to also mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And what a phenomenal week we have here on this particular asset. We've bought, we've sold, and we've bought again. And on all instances, price action has moved significantly well in our favor. Now, before we go into the details on what will be happening today, let's run through how the week started for us all and what led to the decisions we made. Now, at the beginning of the week, we saw how price was trading above an ascending trend line, and the fact that price confined within the $17,970 level and the $17,920 area gave us a clue into the prevailing uncertainty in the market at that particular point in time. And usually whenever we identify a range like this on our chart, we do exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Well, at no point in time did we see price come close to the support line at the beginning of the week, as most of the time our price was more or less around the resistance line. So with a buy stop order above the structure, we had our first buy position for the week triggered, and price continued to climb, triggered another buy position at the breakout of the $18,000 area. But as soon as price tested that area around the 18,200-ish, we saw price drop to the downside, taking us out of all those buy positions after we've moved our stop losses accordingly to now trigger a sell position for us. Remember, we were using this ascending trend line as a yardstick to guide trading activities, and we did agree on Monday that if this trend line is broken, then this may incite selling opportunities. And to position ourselves for bearish opportunity, we had our sell stop order right below the support line of that range, which interestingly shares a confluence with the ascending trend line here. So that was how we got our first sell position for the week. And since that moment, I think for Tuesday, Wednesday session, we were selling, adding more positions at very important levels, such as our key level situated at 17,800. I think we had 2 positions, and as at Tuesday's trading session, we were taking out of all the sell positions. As you all know, when price moves very well in our favor, we move our stop losses, secure the position, and we were able to scoop in. Let me see here. We were able to scoop in over 350 pips on the first position and over 200 pips on the second position, giving us about 500 pips in profit. Now on Wednesday, we begin to notice how sellers have lost the momentum, as we saw how the 17,500 area became a barrier for sellers to break through. And in fact, if we go to as far back as the beginning of this month, you saw how the same level has been negating all attempt by the sellers to break through that particular area. And with this situation identified, we begin to notice the potential of a reversal pattern around this area after considering the impulsive move that got us to this point. So with this in mind, we marked out our neckline had the $17,660 area to capitalize on that uptrend move. Though prior to Wednesday's live session, price had already broken out of the neckline, so we decided to wait and see if the market will give us a second chance in the form of a retest of structure, which actually happened, triggered our buy position, and since that moment we have been buying this particular asset. Now, during our live session yesterday, I did emphasize that we should move all our stop losses to below the 17,800, and as you saw, we had this engulfing bearish candle lead to price action taking us out of all our buy positions with a minimum of, I think, about 800 pips thereabouts on that single one. And during our live session yesterday, I did mention, I can still remember vividly, mentioning that as long as price remains above our key level, we shall maintain a bullish bias in this market. Now, price breaking out of the 17,800 triggered another buy position, and we kept on adding more, had a breakout of the 17,860, another level we identified yesterday, and of course we also had a 17,920, and another one is right here, had a 17,970, with the hopes that price will continue to find new highs. Well, on the USTech100, nothing much to say here. We shall continue to maintain this bullish bias, and in fact I would like to readjust my ascending trend line to capture the recent character of price action since in the last 24 hours. So let me do this and let's see what this will bring us when we bring back our candle chart. Okay, that's beautiful. So we have a newly identified ascending trend line which we will be using to guide our trading decisions going forward. So I encourage you to mark out those trend lines on your chart, as we will be needing them as a reference point to guide our trading activities going forward. So as it is right now, since price remains above the ascending trend line, we have no business selling the USTech100. So we look out for more opportunities to buy at the breakout of the 17,970. So do we still have more levels? Okay, we have the $18,000 area. If price goes ahead to break out of the $18,000 area, we will be adding more buy positions. So let's have all our buy stops order in place so we can capitalize on the next move. And for the current buy position we have here, kindly move all stop losses anywhere between the 17,920 and the 17,890 seems most appropriate. Remember that you do want to be given enough breathing space for price action to move around. So with that being said here, so let's maintain this bullish idea and let's see how the market will play out today. Now, considering the fact that today is the last trading day of the week where market participants may want to be rounding off their trading activity, especially having another key economic indicator in the form of the consumer sentiment index and the producer price index later today, let's not ignore the potentials that sellers could also come in. Now, if we want to be selling, we are going to be using the 17,860. And why are we going to be using the 17,860? Well, very simple. This level here shares a confluence with that ascending trend line we have here. Now, if price can break down the ascending trend line, that means that the bullish momentum is no longer valid again, and the breakdown retest of both of the structure will be all we need to join a downtrend move. So, in as much as we maintain a bullish bias here, don't let us ignore the potentials that sellers could also come in at any point in time. So, mark out these levels accordingly and let's use them to guide our trading activities for today. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the I see Amisco, Hayas, Wolf71, and Emelero. Good morning to you guys. All right. So in the absence of no questions, let's move on into the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and what an interesting trading setup is evolving on the chart right now. And just like we predicted yesterday, price action is just following through the structures we identified on this particular asset. Now, as you will see right now, the current price action is at a critical point as it continues to consolidate around that potential demand zone we highlighted in our live session yesterday, ranging between the 150.00 area and the 149.600 level. Remember, okay, if you do not, let's quickly run through what we saw here yesterday. Remember, we bought the USDJPY and we saw this impulsive move all the way into the 150.870. And of course, we did say here yesterday that this bearish momentum we're observing here may likely be a form of retracement of that impulsive move. And the question as at yesterday's live session was that how far will this bearish momentum go before the next bullish momentum will happen? And to identify this, we used our Fibonacci retracement tool, run it through the previous impulse leg, and what we had was our golden zone area, which of course is between the 50 and the 78.6% of the previous impulse leg. And if you remember what I said here yesterday, I said when price gets into the structure, that we were selling yesterday. Remember, I told us to move all stop losses. That once price gets into the structure, we want to see a reversal setup before we can start considering buying this asset. Now, if we zoom into this current structure right now and look at what is going on here, so to give a visual representation to see what I am seeing, you will see that following this sharp rejection of our key level, price action appeared to have transitioned into a potential reversal pattern in the form of a double bottom structure. And you know how we do it whenever we have a double bottom structure. I did mention yesterday that we should mark out a neckline for the structure with lines at the 150.200 area, and then the breakout retest will validate the potency of that reversal pattern. Hence, I had a buy position triggered at this point in time, and I do hope you capitalize on that opportunity. If you done so, well done to you. However, it is not still clear that the momentum will continue to the upside, but let's see how far it will go before things could change or probably continue upward. Now, one other interesting thing about the structure is how it interestingly shares a beautiful confluence with this ascending trend line. So far this week, price action had consistently respected this ascending trend line, and of course you know how we use our ascending trend lines in this community. As long as price remains above the structure, we have no business selling, as we'll continue to look out for patterns and structures that support the idea of buying this asset. Now, from a fundamental perspective, during the Asian session this morning, we had the Bank of Japan's governor, his speech. It was uninspiring really for market participants, as the market did not even react to that speech at all. This morning he mentioned that he is closely monitoring the outcomes of spring wage negotiations and other relevant factors to assess the strengthening of the wage price cycle. Now, for those who do not understand what this means, in simple terms, the Bank of Japan governor is trying to say that he is keeping a close eye on how well the discussion about wages during the spring season go, along with other important factors. Now, this monitoring is aimed at understanding how the relationship between wages and prices is developing and getting stronger over time. Now, this is not something that market participants really tuned into. As you know, was it not? Yes, during the course of the week, we remember I talked about the recent data from the Japanese economy, which revealed an unexpected contraction in the fourth quarter, confirming a technical recession. Now, with these various factors I mentioned earlier, which of course I will say that this consolidation phase coincides with the resurgence in the US dollar strength, supported by rising US Treasury bond yield, while the yen, like I said earlier, remained uninspired following the Bank of Japan's governor's speech this morning. Now, this uncertainty regarding the timing of the Bank of Japan's exit from its negative interest rate policy, combined with the current risk on sentiment, is exerting pressure on the yen. Additionally, a slight increase in the US dollar buying, backed by a modest rise in US Treasury bond yield, could serve as a potential signal to participate in the continuation of the uptrend. Now, with the situation we have here, I'm of the opinion that price action may continue to go to the upside. The chances of price going up is higher. Now, looking at what happened here in the last 96 hours, you can see the retracement phase had series of lower highs here, giving me this beautiful descending trend line. And in the last 6 hours now, price has been oscillating around that area. And I'm of the opinion that this consolidation phase is just a reaction to the anticipation of the macroeconomic data from the United States today, for fresh impetus into this particular market. So I will hold on to a bullish bias, looking out for more opportunities to buy at the breakout of the 150.400. So having a buy stop order above that structure makes a lot of sense, and we shall be looking out for more opportunities to buy if price action goes ahead to break out of the highest level for this week, which is the 150.870. So I maintain a bullish bias on these assets, looking out for more opportunities above the 150.400. Now, if we are going to consider selling here, I would like to see confirmation happen. But the first thing that must happen if we are going to be selling is for price to drop below this ascending trend line, breaking down that ascending trend line for the first time this week, then confirmations like a retest of structure of both the ascending trend line and the descending trend line could be all we need to join the bearish momentum to the downside. And a further breakdown of the key level at the 149.600 will definitely welcome more selling opportunities in this market. So this is how we are going to be managing our positions for today. So you can see how crucial both this ascending trend line and descending trend line is going to be playing a major role in guiding our trading decisions for today. So I encourage you all to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So this is my simple view on the USDJPY. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the final asset on our watch list for today. And you can as well take that time to mark out this level on your chart. Very, very important. I see you, Musa. I see you, Rajesh. I see you, Ness. And I see you, Mizia. Good morning to you all. Glad to have you around with us today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving right into the final asset on our watch list in a moment. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, I will say this is one of the most profitable assets on our watch list for this week, as we were able to scoop in some significant amount of profit on this particular asset. And one of the turning point for the week was following the US CPI data that came in unexpectedly high on Tuesday, resulting in a positive traction in favor of the US dollar. And this gave us 3 positions triggered. Remember, we did have a sell stop order below the $2,025 area. We also added one more at the breakdown of the 2022 And finally, we had another one at below the $2013 area, running all the way into the $1,985 level, to give us a minimum of 700 pips in profit on this particular asset. And for those of us who capitalize on that opportunity, well done and kudos to you for being on standby. Well, after the strong bearish momentum to the downside, we begin to notice that price action was confined within a range for a while, remember? And we talked about this yesterday. And while we caught price within a range here, we saw a couple of factors from technical standpoint that supported the idea of a bullish momentum. One of them is the ascending trend line we did identify here after connecting the series of higher lows, giving us signs that buyers are gradually gaining momentum within this whole consolidation phase. Then the other one is the potential inverse head and shoulder pattern, though it's not a theoretical one, but it looks like one, like this left shoulder, where this one is the head, and then we have the right shoulder here as price was unable to get to as low as the left shoulder. Then we had the neckline of this pattern somewhere around the resistance line of the range at the $1,995 area. And you will remember that we said we will be buying the breakout of this particular structure, and in fact a couple of hours into the New York session we saw price break out of that level. And if you in any way missed out on the first one, price was kind enough to come back, retest the structure to give us another wave of bullish momentum. And if you capitalize on that opportunity, well done to you, as currently you should be having a minimum of 115 pips in profit on this particular asset. And it is high time you want to be moving your stop losses right now to secure this current buy position as we approach the PPI data and of course the CSI data coming up later today. So anywhere between the $2,002 and $2,000 area seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. Now, based on what is going on right now and from a technical standpoint, the current bullish trend seems to be holding strong, with price action maintaining levels above the ascending trend line we identified yesterday. However, the potential for further upward movement on this asset is uncertain due to the US dollar's recent recovery, alongside a slight uptick in US Treasury bond yields and a cautiously optimistic market sentiment. At this juncture, like I said earlier, it is advisable to safeguard all buy position at this stage. Now, though during the Asian session, we saw this whole consolidation phase, and in fact, it's beginning to give me signs that price may continue to the upside. So if we look at this consolidation phase closely, you will see an ascending triangle, which technically is considered to be an uptrend continuation pattern, where the breakout of the resistance line of the pattern at the $2,005.50 level will be all we need to join an uptrend continuation. And because of this pattern here, I already had a buy stop order which has been triggered right now. And for those of us who have been with me for a while now, I hope you are able to identify this. If you did, well done and kudos to you for capitalizing on that opportunity. Now, as it is right now, following a disappointing US retail sales report from yesterday, there are speculations that the Fed might consider rate cuts soon. Nevertheless, the robust US consumer inflation data and hawkish comment from Atlanta Fed President yesterday, Raphael Bostic, suggest that the Fed could delay any policy changes until their June meeting. Now, despite this mixed reaction, concerns over rising tensions in the Middle East could be what the gold would hold on to to support the XAUUSD in today, Monday, Tuesday, Wednesday of next week. So at this juncture, market participants will be closely monitoring the US economic data release for potential market moving development. So it's important, I will reiterate here, secure your existing buy positions while we remain vigilant for new trading opportunities. Now, for those of us who missed out on this breakout of the $2005 area, that is this level right here, well, let's see if the market will be kind to give us a second chance to join this uptrend move. And what we will be looking out for is a retest of structure to join that uptrend continuation. So if that happens, well, we have a second chance to join that uptrend move. Now, if price continues to climb and find new highs, remember that considering this impulsive move that we saw here on Tuesday, this old bullish momentum may be a retracement move where we do not know how far it's going to go before the next wave of bearish momentum will happen. So we have levels here that we can use to monitor them. We have the $2013 area, we have the 2022, we have the 2025, and of course we have the $2027 area, all of which, as soon as price gets close to the structure, we move all our stop losses on our buy position, secure it, and wait to see how the market will react with these levels. If it breaks out the level, then we look out for more opportunities above the structure to add more positions to our existing trade. But if price gets into this level and we begin to see selling pressure below the structure, it could incite a downtrend move. So if we see selling pressure at any of this level, it could be here, it could be here, it could be here. Please, once we start seeing selling pressure, let's see if we can identify a reversal pattern like a double top structure, head and shoulder pattern, or rising wedge. If we can, mark out the neckline of that reversal pattern and then sell the breakdown of the neckline. So that is how we are going to be managing this uptrend scenario here. Now, what happens if price does not get close to the 2013 at all and instead continues to drop to the downside? Well, if that is going to be the case, then this ascending trend line will be guiding our decisions going forward. Now, if price breaches this ascending trend line and breaks down, retest it, then we'll have no other choice than to get ready to sell this particular asset. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off to see if there are any questions before we go ahead and round off on today's Extreme Speed live technical analysis session. All right, I see you, IS, Jonomix, and Olis. Glad to have you guys around with us today. And in the absence of no questions, I think we have come to the end of the Extreme Speed Live technical analysis session for today. And so far this week, we've done tremendously well. Well done to everyone who was part of the profitable journey. And glad to have you newcomers in the house with us. So today we were able to take on all the assets on our watch list, which includes the USTech100, the USOILSPOT, USDJPY, and finally the XAUUSD, where we were able to identify simple trading setups that we will be using to guide our trading decisions for today. And I do hope you marked out these levels accordingly on your chart as we illustrated. If you have done so, well done to you. So all we just need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, we do want to be having a well-defined risk management strategy in place so that we can mitigate against any risk at the point of price moving in the opposite direction of our plan. For those of you joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions as we come here again to review and begin the new week on a positive note. And so the next session is, I look forward to seeing you all Monday's trading session, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for the new week. So on this note, I would like to wish us all the best of luck and wish you a wonderful weekend too as well. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.